China. I can't think of a country more puzzling. China is certainly an adversary in every sense of the word. Economically, foreign policy, geopolitically, and perhaps someday soon, militarily. But today I want to focus on markets. There are a lot of themes playing on markets this week, but at the top of anyone's list has to be the announcements coming out of Beijing. A massive stimulus package meant to prop up their economy and, more importantly, their markets. I think this is where President Xi is focused. Get the markets up and get out a clear message to the rest of the world that they're doing something about it, that President Xi got the memo, so to speak. Bears on China, like myself, have come out hard against the very repressive regime there and really called the country uninvestable. I've been that way for maybe 4 or 5 years right now. But China is still 19% of the GDP of the world economy, so it's an important aspect of our global growth. It's certainly important for us here in the United States. And what happens there does affect world markets. The message that Xi is trying to send to the world today is that China is back. Well, is it? Let's find out what's working, what isn't, and what's next. Welcome to The Money Runner. I'm David Nelson. When you look at this package, it is really massive. It's a bazooka. Stimulus injection, massive. Reduced mortgage rates. Reduced capital requirements for financial institutions. Swap facilities for insurance companies to actually go out into the open market and buy stocks. And I guess what President Xi's trying to do here, they're targeting 5% GDP growth. They want to sustain that, and they want to get a message out to the world that they're capable of doing that on a sustainable basis. And the narrative that shifted here is there's a new dynamic here to focus on economic growth, not just trying to repair the property sector, where there's been so much speculation and at the root of a lot of economic problems for China. I guess my pushback is the following. I think, frankly, China would do a lot better if they let voices speak out loudly. And of course, that doesn't happen. There are whispers about the economy in China, but no one dares speak out loud. As a matter of fact, just recently, The Guardian reported that another Chinese economist, I think it's Zhu Hengping, if I have that right, spoke out against the economy and President Xi on some WeChat group. He's gone. Disappeared. Nobody knows where he is. That's the kind of thing that happens there. Nevertheless, like I said, what happens in China ripples through the entire world. Maybe the most notable market to have moved is the ETF K-Web, which is really a basket of Chinese internet companies. Look at that chart. That's a one-year chart. Now, what you'll notice there is it took just 6 trading days. So this must have leaked out a little while ago, but it took 6 trading days for this ETF to go from close to 52-week lows to 52-week highs. That's extraordinary. I don't know the last time I've seen something like that. However, when you zoom out a bit, take a look at this when you go back 5 years. Even today, I think it's down. I'm guessing on this. I think it's down about 75%. That's gargantuan. But the one thing you can say about it, that chart, is that for the last couple of years, it's been sideways. So maybe the bottom is clearly in. You can see there's 1, 2, 3, 4, maybe 5 times that this chart has tried to repair itself and these stocks try to break out. Maybe this time they can do it. Take a look at the CSI 300, which is, I guess, their local market. That's a 5-year chart. That's a downtrend that's been in place for quite a number of years, right up against the line. We'll see what it does in subsequent days, but it looks like it's trying to break out. What's important for us to understand here, even if you're not invested in China, or internationally is that what happens with this market tremendously affects what happens right here in the United States, because in many ways, global capital is a zero-sum game. There are only so many dollars out there to invest. So if capital starts to flow in to Chinese investments, my guess is some capital is going to come out of here at the United States, and maybe it will be even meaningful. Look at this ETF flows chart of China over the last 3 years. You can see in just the last, I guess it's a couple of days, couple of weeks, pretty big inflows, right? That's in some ways capital going out of our markets. What it also does, it shifts what's working here in the United States. Now, we don't know if this is a 1 week thing, a 2 month thing, or whether this is going to be some kind of sustainable trend. But look at the material sector. We don't often talk about material stocks. These are the DuPonts, the gold stocks, the steel stocks, chemical stocks, even paint companies like Sherwin-Williams. But look at that. That's a one-day action on Thursday. Most of those stocks are up, high single digits. It's only 2% of the S&P 500, so sometimes we don't pay enough attention to it. But look at what I've zoomed into on the right side of that screen. That 300 there, that applies to Freeport-McMoRan, mostly a copper company. Very, very important for does well when global growth does well when China does well because they consume a lot of copper. That's plus 300% above daily volume. That's a lot of institutional capital going into that company. And you can see it. There's quite a number of names that are seeing an increased volume there. So obviously a pretty big day. It sucks money out of our markets in the same way as we saw today. I think the Magnificent Seven, large cap secular growth, pretty flat on the day. I think Apple was up a little bit. Microsoft was down a little bit. NVIDIA was about flat. Not much of anything going on in the traditional leadership of U.S. markets. But that's a change that's been undergoing for, let's call it almost a full quarter at this point. No, maybe 2 months. But in any way, since July, this chart that you're looking at right now is the XMAG 7. I didn't even know this index existed. But the XMAG 7, what that is the S&P 500 minus the Magnificent Seven. And you know the names: Apple, Alphabet, Microsoft, NVIDIA, Tesla, Amazon, Meta. Those are the names, but that's the index without those names. You can see it's done pretty well in the last quarter. The S&P 500 is under that, and Magnificent Seven is on the bottom. If you spread it out year to date, obviously the Magnificent Seven are the clear leaders. But again, some capital coming out of our markets looking to go somewhere else. And it's not just China. Take a look at this next chart. This is the MSCI, which is the MSCI ex-US ETF VEU. That's a 5-year chart trying to get to at least a 5-year high there. That's a pretty meaningful breakout. Let's zoom up into the upper right there. That's capital leaving the United States. Doesn't mean that our stocks go down, but we may have to go sideways for a little while if this, in fact, this trend keeps pushing higher. This next chart is maybe the most important, and this is the one we're going to spend a little time with here. What you're looking at here, this is not a price chart. This is a valuation chart. That white line on top, the white line is the MSX US MSCI index, international stocks, not including the United States. That is the PE ratio on a 12-month forward basis there. And that's relative to the line on top, which is the United States. And you can see the valuation in the United States, that's starting to get close to the valuations that we had, 2020. Pretty expensive. I think we're around 21 times forward earnings there. That line on the bottom tells a very meaningful story. That is the spread between the two lines on top. And we're going back 15 years, going back to 2010. And you can see slowly but surely capital has come out of the rest of the world and come into the United States to prop up our markets higher. That's what's driven a big part of our valuation. Now, there's a good reason for that. This is where the growth is. When you look outside the United States, what large mega cap companies, what large technology companies can you point to? There's a few. Taiwan Semiconductor, SAP. Which large pharma companies are out there, developing life-saving drugs? There are several, obviously, over in Europe, but nothing like we have here in the United States. The discovery in science outside the United States is quite small. Most of the growth, the technology growth, is right here in the United States. China could be a formidable player if it wanted to be. They certainly have the manpower, and they certainly have the will, and they have a very, very bright nation, but they have this very repressive regime there, and I think that clamps down on capital development there. For U.S. companies here, they're very reluctant to put capital into China because they've abused it. The theft of intellectual property, the idea that you go there, you have to partner with a local entity in China, and they pretty much steal your IP. And then when they don't need you anymore, they get rid of you, and they produce it on their own. Nobody wants to do that anymore, all right? It's got to be a two-way street, and that's not what it's been. Maybe this is the beginning of something. I'm a skeptic. What may happen in the end of this is this may end up being better for the rest of the world than it is China itself, because unless China gets to the root cause of some of its internal problems, I'm not sure, just injecting capital is going to do the job. Now, we can't certainly put them down because we live in a glass house. We pump a tremendous amount of capital into our markets here in the United States, both through monetary policy and fiscal policy. But this is a trend we're going to have to watch. I'm not ready to commit massive amounts of money here or large amounts of money, but it is on my A page. You can bet I'm watching this because long, sustainable shift in capital markets happen with big moves like this. It usually starts with big moves like this. Think back to 2020. I can't remember the month, but I remember it was shortly after Pfizer had announced that they had come up with a vaccine. And prior to that, energy stocks were in the toilet. Nobody wanted to own energy. I don't think I had a single energy stock at this point in time. But shortly thereafter, that announcement, realizing that the world was going to come back, the energy index in the United States jumped 15% in one day. The XLE, 15% in one day. That's massive, right? And it never looked back. If you think about it, that large initial move was the beginning of a longer sustainable move that lasted through 2021 and 2022. 2022, energy stocks were killing it. Now, they've lagged, obviously, over the last, call it year and a half at this point, and I think the worst performing sector year to date. But for a while, that was a sustainable trend, and it started with the big move. Now, that doesn't mean every big move has a sustainable trend. It's probably just the opposite of that. But this is something we're going to have to watch and watch very carefully because it may force us to shift some capital here and maybe shift some of our investment thinking about where we want to invest our dollars. Well, that's it for this week. If you like this pod, please don't forget to hit subscribe. And if you want more information, go to my Substack site, dcnelson123 at substack.com. You can have access to the charts. I write weekly. I also post my network appearances there as well. I'm David Nelson, and this is The Money Runner.